How about now? Can you hear me talking now, Sherpa? What's up, everybody? Happy Friday. All right. What's up, GIG? Or is it Gig? All right. So, welcome to the weekly close live stream. Thank you guys for spending your Friday afternoon with me. Got a couple of things that I want to talk about this week. Big things, of course, are Bitcoin. I made a technical mistake, and for those that are interested, I'm going to talk about what I learned from that particular instance, that mistake being, of course, in hindsight, it has clearly gone up from last week. Tesla, which is both a price action level that we need to take a look at. That's Target, excuse me, that's the other thing. Tesla is coming up to a major level. It's been very bullish all year, especially in the last couple of weeks. Had a very successful long off of 160, but now it's coming up to the first level that we really got to worry about. So let's take a look at that. Like I said, Target is one that I put on just today. We're going to see how that plays out. And of course, if you guys have anything to look at, put it in the chat. I'm streaming on Discord, TradingView, and YouTube all simultaneously. So click on the links below to join if possible. All right. So, like I said, get your things in the chat if you want to talk about them. Otherwise, we'll start with a little bit of market update because, man, we've had a very bullish year. Who would have thought that after 2022, the market would ever go up again? But here we are. We were just looking at the NASDAQ as we were getting ready in some pre-show talk. This is the NASDAQ on the daily, starting here in January. It's just bullish. I mean, it's held the Tinkinson, which is the red line, all the way up, especially in the last couple of months. And at this point, I start getting a little bit nervous from my experience in trading. Yes, things can go up a very long time. Markets can remain irrational longer than you can remain solvent. But at this point, you got to start looking for a bit of a pullback. Things just don't go up forever. I want to see some kind of a retracement and then maybe have the opportunity to put on some more longs. Doesn't mean the market has to give it to us, but I'm going to be looking for it. We have really the first thing on the NASDAQ that we have in many, many months, which is a close below this red line being my trigger line. It's the Ichimoku Tinkinson, but above all else, I look for price to respect that in a major trend. And as you see, let me get my tool here. Back in May, we came down and touched it, held it, and then at the beginning of June, touched it, held it, and then this week, or this day right here, it's Friday, we finally had a red day that got us down below it. Now, there's a lot of interesting things that have been happening this week that I've noticed, a lot of divergences. For one, go back and look at the ES, this is the S&P 500. It too has finally violated that strong trend line in the sand. So got to pay attention to that. I would like to see some sort of a pullback to play on the way back up, because in the broader sense, I mean, what we're basically doing, and then here's a chart of the weekly going all the way back to 2020 to the all-time high. The market is basically trying to make a test of the all-time high. And if you talk to people at the beginning of the year back in January who were convinced that there was a recession coming, which I still keep hearing about, when it gets here, I don't know. But the market seems to be pricing in a good economy. That's what the stock market does. But at this point, we're in the phase where we're trying to test that all-time high. Test means it's going to make a run for it. It's going to try to get up there. It's going to try to break it. Will it stop short? Nobody knows. But we're in this later phase of this current bull trend. And it's going to be interesting rest of the year to see how it plays out. No matter what, it's going to be probably a positive year. But I have to hedge everything as a trader because anything can happen. NASDAQ is doing the same basic thing. It's trying to get back up to its all-time high. And, if we just go back and look at some of the, the comments from, months and months ago, no one could have foreseen this happening. And that really kind of speaks to the folly of people's assumptions on trading, is that, we get locked into this mindset like we were in 2021, where everyone, whether you're in stocks or crypto, just assumed that they would just go up forever. Maybe a few people were questioning that narrative, but it was very, very bullish because 2021 was so bullish. And then, of course, we have, unironically, the big bear market of 2022, and people just assumed, okay, well, now this is how things are supposed to be. Things are supposed to go down forever. I have a lot of close friends. Well, not a lot of close. I have one close friend. I won't mention his name, but he really, really, really was betting on, and even putting his money where his mouth was. I think something to the tune of SPY down to, I don't know, double digits. Basically, is where he said that he wanted to finally buy the stock market because the economy was so horrible. Really, but that kind of doom porn, just in my experience, doesn't make people very much money. Waiting for that kind of an opportunity makes you miss a lot of good opportunities. So let's see. What's up, Aramo? Can we look at this cybersecurity company? Sure. I'll do a market update and we'll take a look at it. Again, if you have things to take a look at, post them in the chat below. Also, don't remember the social media links as well. AMD worth entering. All right, we'll look at that in just a second. So that's the market. Now, another thing I wanted to note is the VIX. VIX has been interesting this week because on a day-to-day basis, there's been an interesting divergence. As I think it was on Wednesday this week, we had VIX up while the market was down, and that's odd. Normally, the VIX goes up. Volatility rises when, hey, thanks, Turk. Normally, volatility rises whenever the stock market goes down, but essentially what has been happening is with VIX going down, the volatility, the implied volatility of the SPY is suggesting that what we're going to see is a slow grind up, just a slow grind up to that high. This is getting down to close to the sub 10 or low teens VIX, and we haven't seen this VIX this low since basically 2019, almost pre-COVID. Yeah, and then of course the next basically phase of VIX, which I'm actually not excited to see as a trader, is the 2017 VIX, where, like I said, it was below 10. Because when you get down into that range, it's really hard to find good trades, especially if you're trading futures, because the movement on a day-to-day basis back in 2017 could sometimes be 3 or 5 points. It was interesting this week because last Friday, there was an opportunity. One thing I noted on Discord was the fact that so many stocks triggered my opening 30-minute spike signal. I look for this every day for price to make volatility spikes. And if we go back to the morning on Friday, it did this sort of a top out spike right here where it comes up, price, this is on the S&P 500 futures, ES. It comes up, breaks that high, and then closes back inside, making a little double top with a false breakout. And so this triggered a move which set up the rest of the week. We had a short cash open week. We only had 4 days this week because of the Juneteenth holiday. But basically, we retraced all the way down to those lows. But even though this chart looks very big, the reason I'm illustrating this is because if we actually measure where we are from last Friday, we're only about, let's see, we're only about 100 points off. 100 seems like a big number, but in weeks and months past, like back in October, a 100-point move was basically, there's a 200-point move on that CPI back in October. Here's basically a 132-point day back in March this year. So the scale, as VIX gets lower, as VIX gets smaller, as volatility decreases, the scale of, let's say, 100 points right here, where we are right now, is much smaller. There's just less room to move. Whereas what took a week, this week, to move, that is what we used to see in a day back in March of this year. So that's a good illustration of how much volatility has kind of closed, and that's why the VIX is now getting so low. And so as a trader, I like volatility. And so what you have to do, or at least what I'm looking to do, is go up in the time frames and look for these setups in the higher time frames, whereas before, on a 100-point day, you could get down and dirty in the 1 minute and really make some pretty good profit. So be looking for that as time goes along. You may have to give more time to your trades. So if you're trading options, go a little bit further out. Although I was looking at options this week, and volatility has contracted so much, especially on VIX, because I was looking to take a put credit spread, and I just couldn't find a good risk reward. Because volatility and the prices of options have contracted so much, it's actually getting into a really good time to buy single options because volatility is so low. You don't know if you're going to have a big price movement, but if you do, the market's not pricing it in, and you can get that extra bonus if volatility expands. And that's why we're finally getting into this time period in the market that I don't think people have ever really seen, because a lot of people started trading back in 2020 with COVID, with the stimmy checks, the Robinhood newcomers and stuff like that. They've been trading in high IV environments. Now is actually going to be the time to trade options, because you can buy a single option, and then volatility, instead of crushing, going down and hurting you, now it can actually help you. So this is when people should be looking to trade options. And from this point, I'm going to be starting looking for some bearish setups. I would like to see going into next week. What I'd like to see is maybe some kind of retracement in this range right here, maybe possibly 50% retracement of this week. So a 4440 on ES pullback would be something it's interesting for me to see. Notice how basically we just stayed right in this zone from this low that it made back on Wednesday of last week. I think that was the FOMC last week. We just came right back to that FOMC low. So price is the price. You didn't even need to know what this was. You just need to know that's where the low it came down to this week. Let's continue on. Let's look at gold. Gold has been a trade, been in for several weeks now. This is a long-term trade. Again, this is a daily trade. We started it back at 2034 on gold. I'm playing this through GLD, by the way. There was a very nice spike that some friends of mine caught earlier today on the 1 minute chart, but there's also a really good false breakout spike. Let me take that off right there. This right here on the 1 minute of gold futures GC. That's a nice little double top out spike. Big old 287% ATR spike right at 9:45 this morning. And that basically put the top in for gold today. Great textbook spike right there. But again, this is in the context of, let me bring back my deleted thing. Oh no, I lost it. Okay, that's fine. This is in the context of the spike on the daily. Again, that's why I like my spikes, because it is a setup that can happen on any time frame. I mean, this is cool. I mean, check this out. So you have here on the daily, back on May the 5th, you have a high that's put in on April, sets up a high, spikes above it, and then closes back inside the range, and that triggers this short trade, and it's moving down. 1 minute, all the way down to the 1 minute. At 9:45 today, you have the exact same pattern. You have a high that's put in at the end of a trend, a spike that goes above it, closes back inside, and that again signals a reversal. So textbook trade within a trade right there, daily all the way down to the 1 minute. People ask me all the time, what time frame is the best to trade? What time frame can you use setups on? If it's a good technical setup, whether it's moving averages or anything else, you should be able to use it on any time frame. That's what makes it valid. All right, I know I'm getting a lot of questions in the chat. Let me run through the market update while I'm on a roll, and we're gonna touch on each one of them. So bear with me. DXY, everyone's watching. I got a question for this. I think on my Discord today. It's not much has changed. It's still holding this 102 level, this 50% retracement of the big 2021 to October 2022 trend. And where I'm looking for this to go is likewise fractal 50% retracement up to about 108. And so this is what you assume is going to happen because it's part of this whole bullish trend, unless you do get a break below and then the dollar can fall. But so far, dollar holding its ground week after week, just kind of setting up some people want to call this maybe a triangle that it's setting up. Who knows? I just know that it's holding this 50% right here. So dollar still technically long-term bullish. Bitcoin. Now, I want to spend some time today talking about Bitcoin. Tell you what, I'll do that after I hit the lightning round. But Bitcoin is making its way up this week. There's a lot of reasons people have given. If you read Twitter, they think it's all this institutional capital because they're launching an ETF. They are, I think a lot of big companies, think like Citadel, are getting behind some ETFs. It's funny because all these other ETFs, like the Winklevoss Twin ETF and Grayscale Trust, were all denied by the SEC. And also the SEC has been going after Coinbase. But now that BlackRock, I think it's BlackRock and Citadel, these big legacy TradFi companies are getting behind it, now they're getting more approval. I got things to say about that too. So, and then let's see, stocks wise, I think we touched on, well, no, I got to talk about Tesla. Tesla is another big thing to talk about as a little bit of history lesson. Tesla was along from not here in February, but when it finally pulled back in April to the 160 level, that's the 50% of the January to February trend. That's a buy. Now, likewise, we have to be aware of the 50% on the way coming back up. Last week, we had this week bar, this is a weekly chart, closed above the 258.29 level. This week, we have a close below. And that is not what you want to see. It's getting very naughty up here close to this resistance and closing back below it. And so what I'm going to be looking for as we go into next week are some sort of trading setups to short Tesla up here. I'm long shares in a way that I don't really plan to sell them. So these shorts I'm going to be looking at are a hedge. But as a trader, I have to look at this level and I have to be looking for opportunities to hedge that position. I don't want to sell my shares, but I need to do something. Like you have a big run like this, it comes up to a major level, and then it starts stalling out. You got to pay attention. You got to pay attention to that. And the trade that I put on today, Target made a post about it on TradingView. The reason, now Target, we've talked about this in I think past live streams. It's a big company. A lot of people talk about it. The thing to look at for let me start over here. So clean things up. So the main level that Target should have held was the 158 level, because that was the 50% retracement from basically 2017, this whole leg up to the all-time high. It did not, and it has been breaking below it. And so this is actually a failure of that support. It could go a lot lower. So I'm not going to give it very much room to go against me. But what it has come to in the last 3 or 4 weeks is it has come down to the pre-COVID high. So basically the December 2019 high, which is right here. And that is where it's starting to stabilize. And this morning, as I was going through my 10 a.m. scans, I saw this bad boy right here, which is a 9:30 a.m. 30-minute bar spike. Essentially what you had was this little price range that established all week this week. And then here you open lower, come down, break it out, and then close back inside it for the day. That's a spike to the upside. What I also like about it is that it's happening on a local 50% level. Right there from basically Monday, that's the 12th, so Monday 2 weeks ago, essentially the June low, all the way up to the June high. So it came down to the 50% point of June, and that's, of course, matching up with this pre-COVID high. Good. Trade. Let's go. And so took a long right here. We'll see how it plays out over the next couple of weeks. tight stop on it. But the key thing to remember here is that's a 30-minute setup that we can play. But the real key is now that we've established this possible reversal here at this past major high, this 2019 high, we don't want to let it go below this low that it's set up on June the 12th. That would not be good. If it does that, then we've got this long area in the valley of risk for it to go. So we know where we're wrong. And from where we're wrong, we can set up a trade to be right. So that's the trade for this week. Posted it today. And we'll go through some other stuff later. Let's see. Let's take a look at the chat here. So AMD, let's take a look at that. Is it worth buying? Well, it's done a little pullback the last 2 weeks, it looks like. It looks like I talked about this with you a few weeks ago. Actually, let me redraw that.
I'd be, might see that gap fill and hold on AMD on a daily chart. I know you don't really play those.
Gap? Well, no, I mean, I've seen
Everybody's
validity
seeing
to
that.
it. Yeah, I have seen.
Everybody sees that one though.
Hold on.
It's an obvious one.
Hold on. I think he left the chat actually. Let's see, is he still in here? You still in here, Gig? By the way, another reiteration, I stream this every week, Discord, TradingView, and YouTube. So links below. So yeah, gaps are a thing. Yeah, I mean, it's basically pulled back to that gap. It's not that I discount them. I just don't use them that often. But what I like about this is you have the big bear trend from the all-time high back in December 21, came down to the low in October, just like the market, and it's pulled back to its 50%. It's interesting that it came up to the 50% retracement, 109.51, gapped above it, and has now come back to use as support. So I do actually like this.
This is actually also pretty big. You're also hitting the Tenkan-sen in the weekly, and this is also a pretty significant high in 2022. So there's a lot going on here.
There is.
But that doesn't mean it's going to hold up, but you at least know where your risk is at the bottom of this candle.
If you really wanted to buy it, I'm not going to be mad at you at this level now. That's good. That's the kind of normally I'd want to see a full 50% pullback, but if something's going to rock it, you got to go on little small pullbacks like this, and you have good reasons. For one, it's breaking the bear trend. I mean, it's broken. I mean, you have a whole month. I mean, it broke it back in May, and then you have all these weeks above it, and now it's pulled back to test it as support. So you're basically playing the test of support for a retest of the high and beyond. So yeah, did you get what I was saying, Gig? Were you watching the chat? Essentially, on AMD, what I like is that I think we probably talked about this a few weeks ago because I got it marked up for you. This pullback, because it's come back to the 50% of the trend, it broke above it in a gap back in May, and now it's kind of pulled back to it. So this is trying to use it as support. So yeah, I like where it closed today, right here, this 109.51 level. You don't want to give it too much. You know, don't let it come down below 100 too much if you're going to go long. But yeah, that's a good. I like it. All right. TradingView, let's see. You're welcome, Turk. All right, CRISPR. That's the people that are going to edit our genes, right? Looks like it's just kind of stuck, but could be on the weekly here. Okay, look, hold on. All right, so you've got a 50% pullback from this year's action, basically from March to here. Okay, I'm not mad at you. I like it. I like it for a potential long off of 50%. So yeah, that could be what could happen here. Is you can get either you can draw it from here or the major low here. So 55.47 is the 50% for basically this year's action. And what you're trying to do, of course, then is get it to possibly do a breakout here on the weekly. So the daily 50% is there, which you're at basically today, is pulled back to, and you're trying to get that thing to trigger a breakout on the weekly. So I like that 50% right there. All right. Let's see here. Penn. Hey, what's up, Casey? You got a breakout for me? Yeah. Penn Entertainment. Oh, that's a favorite of yesteryear. That's a favorite of the 2020. I've got that marked off from probably when someone asked back then. This is a good example. Let me do a little history and teaching lesson here. This is a good example of when a stock came down to its 50%. I know that it's back in 2020 because I do my colors differently now. I don't use that shading anymore. And so it comes to this 50%, tries to get above it, and then breaks it. This is an example when something did kind of like what Target did, and it broke that 50%. Like when Penn got to 54, you should have gotten out. And this isn't in hindsight kind of thing. No, because I can show you multiple things. Zillow is a one that I go to a lot. Tesla also did it. When you break that level, that's you got to get out, because otherwise you're going to end up with 50% of the money you would have had otherwise. So back to Casey's trade. Let's see. Daily chart short entry. Casey is a breakout trader. So Casey wants to short this even more. With a $23 share price, I'm not gonna short it, but I think that you can short it, because if you think about it this way, if you short a stock at $2, what's your profit? $2. So what are you really going to make off of that trade? If versus your risk, because the stock could go up to $10. So your risk on a short is unlimited. Your reward on a $2 stock is only going to be $2. Doesn't make any sense. But with a $23 stock, it could go down to 10. So I don't think I'm going to short something like this, but I'm not mad at it. I wish you luck on it though. But I don't see a reason to go long either. I mean, that's just as I say, it's in the valley of risk. It's trying to get down to its low at 432 that it set in COVID. That's what it's trying to do. It's just bleeding people out that are bag holding. I feel bad for them. All right, let's see here. PANW from Aroma. Palo Alto Networks. I assume this is a tech company, or is it a what do they do? What do they do? Cybersecurity company. Okay. Well, like lots of tech. I mean, tech has been really leading us out of this bear market. Let me pull up the sector rotation chart right here in just a second. So, what do I think about it? I think it's good to be in it. Do I want to buy it here? This is not my type of trade. Let's see. If I had to look into a crystal ball, what I would like to see, since this 50% would bring it in here, I am going to draw this up and we're going to see if I'm right. I think that probably what I would set up is that this will go up enough to get that 50% to there, and then possibly set up a support like so to come back to retest that high, because it never has done a real retest of the 208 all-time high, the one that it set in April of 2022. So to set up a trend that would give you a 50% at that level would take you up to about 285. So what I'm trying to say here is, if you're long this and you're trying to figure out what to do with it, you can hold it, but at about 285, I would start to look at maybe hedging that position, maybe selling some calls against it, because that could be a potential high prior to a pullback. And then what I would like to see, if it happens this way, is a pullback to that 210 level, or at some point pulls back to 210. That might be where I look to pick it up. Key thing is, you're in the middle of nowhere, and it's just good to own it. But the risk reward to try to go long at this point is not attractive to me in the way that I like to trade. So good luck to you on that. All right, let's see. Coinbase looks interesting. Well, for those that listen to me pretty consistently, as kind of a meme, Coinbase closed today at 61.47. which means to me, in my personal opinion, it is now overvalued by $61.47. So I do not like the company as a matter of principle, not financial principles, not by any fiduciary responsibility. I just don't like what they've done in the crypto sector. As a sort of an aside, since we're talking about fundamentals, you would think with Bitcoin and crypto ripping that Coinbase should be seeing the benefit of that like it did in the beginning of the year, but it is not because, again, going back to fundamentals, a lot of this talk this week, a lot of the bullishness from the last few days has been centered around companies other than Coinbase getting their hand in Bitcoin. In other words, these companies with many more billions, much more ties to the regulators, that incestuous relationship where people retire from the SEC and then go to work for Citadel and BlackRock. Yeah, those are the people that now seem to, according to the narratives, be in pumping Bitcoin. And meanwhile, Coinbase is under investigation by the SEC. So take from that what you will, but what's been happening over the last few weeks has not been able to meaningfully pump Coinbase out of this malaise, this chop that it's been in for most of the year. So I personally hate the company, so I'm not going to advise anyone either way, but you're not seeing the kind of pump that you should out of crypto going up because they should be very highly correlated. So, yeah. All right. What's up, Rui, from the other side of the Atlantic? Hey, you're welcome. All right. So that goes through the list of things. While we're now talking about crypto, I want to talk about my mistake. Let me first muse for a second about making calls on Bitcoin, because I have a lot of friends. I've been into cryptocurrency for over a decade now, and so I've gone to a lot of local meetup groups. Got a lot of friends that I've met that way, and especially more recently, they've adopted this religion of Bitcoin maximalism. And throughout this year, I've been making Bitcoin calls. I made one back in January. That was when Bitcoin was first coming out of the Ichimoku cloud, and people were very happy to hear a buy signal on Bitcoin. But when the same thing occurred last week on the opposite side, when it finally closed below the cloud on Friday of last week, I said, okay, now it is time to sell. Now, that was, of course, from a bullish trade. That is a setup, as I like to do. I like to trade setups rather than fundamentals. And basically, there was a 33% run if you take it from the initial breakout of the cloud to the bearish breakout of the cloud. Not bad profit for a trader. But if you're a hodler, you just committed an act of heresy in that you would ever sell Bitcoin. And so they're very, very happy to go around in a circle, jilling each other about how Bitcoin's now up 25% in the week after I said something like that. Now, for those that want to learn something, I can admit that I made a mistake. And here's what it was. This setup, this Ichimoku breakout setup, is one that I trust. I've studied it in Bitcoin. I've studied it in other instruments. It works. But like all things in trading, it doesn't work 100% of the time. But throw that out. A key thing that I missed, that I didn't really take into account, that I should have this week, and I posted on my Discord when it happened, was where this breakout happened. And this is why you'll see me on my charts oftentimes take off my simplify things, take things off the chart. I'll put on Ichimoku, I'll take it off. I'll put on retracements, I'll take it off. I'll put on spikes, I'll take it off. Is because when we use too many indicators, we confuse ourselves, or we focus too heavily on a single indicator. In this case, because I wanted to look for that breakout, the same breakout that triggered the bullish trend up, I was looking for reversal for trend down. And I had plenty of time to sit here with Ichimoku on the chart, watching it for many months, all the way from April, as it made its traverse across the cloud and got into a situation where it was setting up to go bearish. But in the process of that, what I neglected to pay attention to was the cadence that Bitcoin has been using with my other tested, trusted indicator, which is 50% retracements. Now, the other buy signal everyone was happy to receive was on the 50% retracement of the trend to date, year to date, when we had that banking crisis. That was back on March the 9th. When you had this big banking crisis, everyone was afraid that the US economy was going to fail because two banks did. And that was actually a buy on Bitcoin because it pulled back to a 50% retracement level. That also, as it oftentimes does, matches up with the bottom of the cloud in Ichimoku. But the key thing here, and why you see me take Ichimoku off, is because I want to focus on just that 50%, that part of the trend. That's key. So much of my trading relies on that because it works so freaking often. And so that worked for that point up to there. And so it rose off that point. Well, as it did a pullback into it, the one thing I neglected to do was pay attention to, okay, here we have another trading leg from this low up to this high right here. So does it in itself have a 50%? Yes, it does. It has a 50% from that low to here. Now, what I was looking for was the big 50%. I wanted to see a pullback on that breakout all the way down to, let's say, 23,227. That was what I was expecting, a pullback to there. Basically, the entire year is 50%, which is valid. But the problem with this breakout was that it occurred right at this 50% level right here, which could have always been possibly support. And so we had a single day. And again, this is why algorithmic traders have such a problem when you try to program a computer to trade, is because if you programmed this to trade just based on that signal, the closing of a bar, at the same time, that momentum, the lagging span, the Chical was outside the cloud, which it did just a little bit right there, just a little tiny bit. If you program something to go short based on this, well, then you're going to have situations like this. Because what ended up happening was, even though Ichimoku signaled the breakout, the short breakout, it was at a support. And what I should have done, now bear in mind, let's back up. This is a profitable trade. So I'm not mad. I ain't mad. But I'm glad I didn't go short on this. And I hope people didn't construe it that way either. This was the end of one setup, the breakout of the cloud to the other. And so I captured the meat of this trend right here. Captured this meat and ate it. But I know I'm never going to get every single little bit. And so the Bitcoin maxis, the hodlers, the people that don't have any use for technical analysis, well, they got a nice little gift. They got a nice little gift back up to the high. And of course, now they're super excited because, oh, Bitcoin go moon from here, right? Well, if you're a technical trader, you already see the problem with where we are going into this weekend right now, don't you? I mean, we're at a major high. We can break it, but we now need to look at what the resistance is. In other words, people were saying, oh, well, you're wrong about it going down. Now you need to buy like us. Ha ha ha. Well, the problem with buying it at 29,000, and I'm not upset that I didn't, is where the higher time frame resistance lies. And so you have this high back in March of 2022 down to the low November, setting up that 50% retracement, which also incidentally is the bottom range of this little area, the summer of 21 that we ran into. We're coming up to the resistance that I've basically been looking at for the entirety of the year. This little drawdown right here kind of gave a sign that maybe we had failed to hit it. We missed it by a small amount. But what it's really trying to do is it's trying to come up and test this major weekly resistance of 31, let's call it 800. So let's call it 3,200 just to round it up. But 3,200 is where it's trying to get up to now, and there's a lot of stuff to validate. It's also the point that Bitcoin got up to basically when it finally broke that summer level, where it hit it back in May of 2022, came up, tested it as resistance, and hit it there. So you've got a lot of confluence at the 3,200 level. So do I want to put on a trade? Now, again, I'm a trader. I'm looking for good risk-reward setups. I'm not a person that believes that Bitcoin is the end-all, be-all, alpha and omega, hallowed be thy name, only money, solution to all the world's problems, panacea of the debt cycle, replacement for the dollar, that the maxis think it is. I see it just as another speculative instrument that can be traded. And so if I'm looking to buy it on 29K, I'm really only playing with about $3,000 of potential profit up to that resistance level. Now, I could probably structure a trade around that, but the risk is too great that you're going to hit this high or this one and snap back. It's just too great. Because what you'd have to do on a trade like that is set it up like so, where if you get below that, and that's really barely a one-to-one, that's not worth it to me. That's not. It could go higher, but you don't know that. All you know is where the resistance levels are. So just like the problem with people trying to reject technical analysis is when something like this happens where it holds a 50%, like it did here, the 50% from the banking crisis low up to that high, when it holds that support very cleanly and then goes up and you're long, great. Yeah, that's a good signal. Yeah, it helped me out. But you got to pay attention when it's hitting the same type of signal from the bottom side as resistance. Just like there's nothing wrong with playing the long on the breakout of the cloud and then responding to it as a short. If I had done a short, then I would have stopped myself out somewhere above the range here. Or essentially, I would use my spike indicator to tell me where I would have tried to get out, basically when it closed up here. So, am I short? No. If I had taken a short, would I be out now? Yes. But I'm going to be watching over the next few days and weeks for what happens around here at the 3,200 level. I'd like to see a setup that I like, and then I'll look for a short. And this is just like what I was talking about earlier with Tesla, as Tesla is also coming up to its own 50% retracement level from its major leg down. The first one, of course, was the leg down from September to here. And what do you have? A respect right there. And then the trade up that we've been talking about for the last few months was the 50% at 160 there. And so we have to be respectful of the 50% here at 258. Just like on Bitcoin, as if you've been bullish, you've benefited from the 50% hit back in March. You benefited from the 50% hit last week. You now have to be cognizant of the 50% hit coming up at 32K. So that is the full mea culpa for Bitcoin. And from a trading perspective, nothing was done wrong. But from a narrative perspective, because if you're going to say sell Bitcoin, you better be right to the penny. That's why this didn't play out. Forget all the fundamentals. Doesn't really matter why it's doing what it's doing. The key thing is this has been a bullish year. And so far it's held each technical level of 50% on the way up. Oh, from there to there. And now we got to be aware of it coming up to 32K. So That's Bitcoin. If you guys have any questions, now would be the time, or anything to look at. Because, hey, what's up, Anointed? So, let's recap a couple of other positions that I've got going on from this year. Target was the most recent example of an opportunity. I think a lot of people want there to be an opportunity every day. There isn't, at least not for me. But the opportunity, I think, of the year and of the decade was Amazon, and it just keeps on going up. All right, Huna, we'll take a look at that. Oil. Oil still remains at this 50% level, which is kind of a hacked 50%, because if we take 0 as the low, not the spike back in April that it made, if we take 0 as the low, the 50% level is 64.98 on oil futures, and it's so far holding its ground there. You got to assume that it'll keep going up off of there. Nat gas. This is one I know we looked at last week, and or we've been looking at in Discord. Oh, did we trigger the breakout? Not quite yet. Not yet. Oh, we're getting there though. Actually, technically, with this week's price action, you now have price above the cloud at the same time that momentum's above the cloud. Nat gas is broken out, technically. I think the reason that I set my entry marker here was just to give that little bit of a buffer above these highs. You know, the high from May and the high from June. But yeah, no, nat gas has broken out. DBA could be the opportunity of the decade. What's that? Invesco Agriculture. Okay. Could be. It kind of looks like the market though, and then it's kind of coming up to the top right here. I got to say no to going long here, and here's the reason why. Whenever I take a trade, like let's just say that I wanted to go bullish on agriculture back in July of 2022. This is a weekly trade, okay? So go long right here. One of the things that I'm going to look at for a target, you know, if you're going long, the obvious target is going to be the high. Well, how often does price fail to get to that high? I mean, a lot. So the way I kind of play off base is I look for the 50% level within the high. So essentially what you have, and this is also if you want to do a little bit of research on this, these are called primary and secondary pivots. So here is where it pivoted low, and here is where it pivoted high. And then I take it within my analysis a little bit further, and I take that 50%, which is oftentimes the Tinkinson, the red line there. So basically that is the 50% inside this range here. And so now you have the 50% of that range, which is going to give you a way to play off base. And oftentimes, if you go back on enough charts, you'll see it. Not only is it a good way to conservatively play that high, it also sometimes ends up being a resistance in itself. And so if we let this thing play out a little bit, you know, remember we're long from down here because we had a crystal ball that told us to. Or maybe we played this double bottom. We found a trade here back in January of this year. Goes up, tests that low, holds it, breaks that low, and then this week it comes up and basically hits that level. So hard for me to go long there. Although if we're trading on a shorter time frame trying to graduate that trade, it looks like what it's going to try to do here is come down to the 50% of the May trend. So maybe you get a pullback here to 21.24, which is basically, you know, taking that secondary pivot right there and holding that to go back up. And then you could probably hold on some to play for that high. So I would look for next week something to happen there, that 21.27 level. I'm not mad at a trade like that, trying to play it on basically a retest of past resistance being turned into support with the intention to continue this as a bullish trade. So that's what I would like to look at on there. But again, little tidbit there. When I'm playing a trade and I'm looking at a high, as my target. I want to be a little more conservative, and I want to look for that type of level. In this case, it's 22.14, and so it already does seem to be showing a little bit of respect for that. So just be careful when it comes up to that. Yeah, cool. Yeah. All right. So let's see what else. Activision Blizzard. I so this is a sore spot for me. The not the Bank of England, but the UK regulators, they created this big red bar, which incidentally happened at this high. That's kind of crazy. A news event basically playing off the exact point of the potential buyout news high. And so it came back, and now it's just slowly coasting up. I've got shares that were supposed to be at $95 a share this month, because June 2023 was when it was expected to close. That's this month. Back in November when they announced, or maybe it was December, what was that? January of 2022, they announced it. 18 months, supposed to be June, supposed to be now. But not going to happen. Unfortunately, I tried to get cute and play this with options, and I will never do that again, because while they were doing pretty well, the fact that this little thing threw a kink into it where it might still go through, just not when it was supposed to, means with options, which are defined by time, that, well, they're not that underwater, because I took January 2024 options. So I still have 6 months for something to happen. But yeah, it would have been better just to be a old boomer merger arbitrager and do what I did, but not get cute and just do shares. So in other words, I have shares at about $78 a share, which is about right here, that I've sat in. And I still think this deal is going to go through. Those shares that I have are up, but I'm still holding on for it to come to $95 a share for the full buyout price. So that's continuing on slowly, but the lesson here is don't try to do merger arbitrage with options, because BS can happen. It's governments, after all. Caterpillar. This is another trade from earlier in the year. This is a trade off of, okay, no, it's more closer. This is the trade off, there we go. We took this back in March, and that's playing out. It's holding on to that. So again, what I'm looking at is, I've got it marked off here. I'm looking for it to come back up and retest this 254, but it looks like it's going through a little bit of a pullback. But this is going to be another learning experience to see if it comes up to that level and holds it as well. Eastman Chemicals, this is a very long-term play, being kind of slow. Kroger, I have to mention it because Jen wants me to. It's just being slow off of this 42 level. MetLife, this is a more recent trade. This is another 50% trade from March low, the COVID low, to the all-time high. So far, holding that 50 level, the 50% 50 level of Met. Still Gucci. Incidentally, do I see something here? What did it come up and hit? Well, look at that. Where it hit this week was the 50% from the leg down. Wow. That's why I trade these 50%. You got to respect them. I mean, I'm of course hoping that it comes up and breaks that, but what a respect of that up here. So that's where if you were being very active about it, which I wasn't, but you could look for potential short setups in here. I think there's a spike that, yeah. So it did a little spike of that on the 14th, Wednesday of last week, which you could have possibly played. It would still be playing out down to there, but yeah, spikes at 50%, they're good. Hope to see them somewhere else. All right, NCLH, I'm just letting this thing ride. Because, again, one of the reasons that I did this setup was because NCLH, Norwegian Cruise Lines, was making higher lows here. And at the time that I put this on, the highs were going lower. And so what you had for some traders was, I think, a triangle or a wedge pattern going on. And I don't really trade wedges that much because you end up having to redraw them a lot. But anyway, however you want to say it, the wedge basically got broken, and this thing is continuing up. Earlier this morning, it did a spike here on the open, which I said, okay, if it breaks this spike, maybe consider taking some more profit. But so far, it's holding a nice big bullish trend. So I'm just going to hold on to this. I'm just going to see if we can get it all the way like up to the 30s. Why not? Just don't look at it. I've got shares. Let's just see how it plays out. Home Depot, another one. This is one of my editors picks post earnings. It did a spike on the last earnings at this 50% level, and so far so good this year. Truist, kind of hanging out. It's doing a second pullback to a 50%. This is a dividend play. I'm probably sure it's still close back up this level to about 7% dividend yield. And of course, Target was this week, and then Tesla. We're going to see next week if we get a short setup. So that's a recap of all the stock positions going in. So be watching over the next few days and weeks for Bitcoin to hit 32K. And that's how we're going to kind of wrap things up. Thank you guys for joining me this weekend. Wish me luck as I go and get my new Tesla tomorrow. Tesla Model S. Very excited. I'm going to take it on a road trip as well. That's going to be interesting. I'm going to get over that range anxiety by taking a brand new Tesla S and driving it out to Denver, Colorado. I'm either going to think it's okay to stop 5 times a day or hate it and never do it again. So, yes, you can get the 50%. The indicator of the lesson. So, with my purchase of this new Model S, I'm a lot more amiable to teaching a class. I don't actually have the 50% lesson. I teach through these webinars and when people ask me questions on my Discord. That's how I like to teach. I like to give it away for free, but if I'm going to take the time to organize it and also make people pay attention to it, if you give something away for free, people don't value it. But I feel like if I organize all of these lessons into a class, run people through it, do some weekly seminars over a course of the markets, like here's an example, and put some private mentoring time into things, I think that can be a good value to people. So I'm getting a lot more amiable to that with questions. Thank you for that question, Anointed. Where you can find that, Anointed, is in the some examples are listed in the retracements channel on my Discord. So you can see a lot of examples where we do some discussions on Discord about that as well. But then if you also go back on TradingView at basically all of my ideas, if I'm using a 50% level, like if you go back to Tesla, the lesson is very simple because I don't believe in using massively complicated indicators. When you draw a trend, basically you can see a trend like this in Tesla from September down to January 2023, comes back up to the 50% retracement. Here, I'll post this in the chat for you right here. So this is a good example for you. That is a good example of the 50% playing out both as support and resistance. So this is a really good example of. Actually, I went through. This is a really good. Actually, this is what I want you to use, Anointed. I want you to use this because I basically go through the history of Tesla, how all the way from 2019 to the all-time high, it created a 50% level, which it held, and then broke it after holding it for a little while, trended down, pulled back to it as resistance, set up a trade to go short, came back down to 160, and had a lot of other good setups as well. The TLDR is profit. So that's a good article on TradingView to look at for 50%. But I could probably put a class together. So more on that later. Thanks for joining me. You guys have a great weekend. Trade wisely. We'll see you in the next one.